Hey everyone, it's JJ from Micro Futures. I hope you guys are all having a wonderful long weekend. I'm going to do a little video here to show you what we should be looking forward to this week and in tonight's Globex. We're going to look at some levels and see where you can expect some responsive buying and just how we're going to trade this crazy thing as the weeks go on. Um, Given that it's a long weekend, you can see that there's the overnight session from last night. There's that abbreviated session of the early close today. And so this is Friday's profile here. Now, we're kind of inside Friday's range. We're just kind of breaking out of it here. We're in a distribution. And the reason we're in a distribution is because all of the inventory is underneath us. So when all of the inventory is underneath us, what would you do if you were long all of this down here? Right? You'd want to sell it for profit. And that's exactly what we're doing. Now, what we're doing is we're using short positions, which are located here and here. And that's from Thursday's profile from this move up. So we're in distribution above 61.31 and a quarter. The market's going sideways because the sellers do not have to compete and lower prices. Here's a little hint and a little trick for you folks who love shorting. I love shorting too. Shorting a market that has a limited amount of supply or shorting a market that has a decreased or restricted amount of supply like these US equity markets. And I've done videos, check them out, on why these markets always keep going higher and higher. There's a structural reason. So when you're shorting those kind of moves, what you want to do is you want to wait for the backside of the move. You don't want to short the front side. So what you need to do is you need to recognize that sellers are competing and pushing price lower. And there you have a short. Shorting the front side of the move is very costly, very dangerous for retail, right? If you don't have hundreds of millions of dollars, you're going to get stopped out. You're just going to get run over on the front side of a move, okay? Because you can't predict where the top is. Let the market put in a top, then start shorting once you see sellers, okay? Every smart short seller knows that. It's the oldest trick in the book. That's how you trap what we call dumb money shorts is you get them to short the front part of the move. Then they get trapped and they provide the bid or the buying to help you hold the price up while longs get rid of their stock at or whatever, their futures at a higher price, right? We basically stand on the backs of short sellers that are trapped to distribute, right? That's how markets work. Very simple. So what's going on is we're in a distribution above 61.31. Don't start getting short until we accept under 31 and then under Friday's high. I mean low, right? Because if we break Friday's low, the shorts that are sitting there in that area, well, that means that they've seen sellers and they're going to drop their bids. Where are they going to drop them to? The next area where they're short, and so on and so on. So if you look at this market profile, you can see there are areas where you're going to be looking for responsive buying. And that's what the smart money does. The smart money looks for these areas. So if you're short, these are areas that you would be thinking about covering. But you don't want to short unless we do a look above and fail of 46 or a look above and fail of 31. And you can see sellers pushing the offer lower and lower and price competing and moving down, right? That's smart. So that's what you want to do on a longer term. Here's the problem with this market. The problem is we are in an area, and I'm just going to zoom out and show you another chart with some new balance levels. We're in a area where the all-time high is up here. And when you have that all-time high up in that 61.80 area, sorry, so we're way up here, 61.86, 82, 86, somewhere in there. When you have that, you realize that there's not a lot of inventory up here, which means there's not a lot of product that's there to sell into this. So a lot of these people that were long in this area back in December have already been flushed out. Remember, this is a futures market. It's a speculative market. It's not a market where people buy and hold for 30 years. It's not an investment market. It's a speculation market. So if we start accepting above, here are your levels, 61.63, 61.86, and 62.10. Those are the levels that you want to watch out for. If we start accepting and doing this, be careful shorting. Wait for the move to enter the backside of the move. The backside of the move is created when wholesale longs and size longs, swing longs, when they start to see competition. What kind of competition? Sellers. So I go to sell at 5, somebody undercuts me at 450. I go to 4, they go to 375. That's how competition, just like Walmart and Best Buy will compete to sell the same TV, right? We will not be undersold. So when you see that, that's your signal to short, right? When it's in a distribution like this, very difficult for short sellers. And I know it's too high, it's got to go lower, yada, yada, yada. Don't fall for it. Okay. Don't fall for it. Trade back and forth in these balance ranges until you spot a seller. Be smart. Okay. Be smart. Don't be food. All right. So for tonight's Globex, we're going to use Friday's references. So we're going to use Friday's high and Friday's low. Now, market profile people like Dalton and so forth, they tell us to use the last full days fixed references. So we're going to treat all of this as inventory, and you'll just use the stops. Here are the lower stops and upper stops. I've got them marked here: 60.51, 60.54, 58, 60.60. Those are all the upper stops where you will see responsive selling when we get up there. So if we start creeping, you can already see this thing's closing up here at the 46 level on the early close. We start creeping higher, we'll be above inventory. When price gets above inventory, right, think of it as the truck leaves the warehouse with the goods to take them to market to distribute. So don't short this move. Wait till it goes up and then trade the back and forth in the distribution balance. Okay. If we get some liquidation, and I'm hoping we do because I don't like markets that don't liquidate, look for these references at 43, 40 half, 38, right? These areas here, the cost basis of Friday, we've got lower stops of down here, the close. These are all valid references to the downside. So if you want to learn how to trade using some common sense, good risk management, if you want to learn how to trade with the market instead of fighting it and getting run over all the time, if you want to learn how to trade so you don't trade at the wrong time and get chopped up, learn the business. Few simple, simple things that I teach in our room. Come visit us at microefutures.com. Learn how to be smart money. Learn how not to be eaten. Learn how not to be food. Come check us out. We've got a 7-day free trial. I'm JJ. We also offer lifetime free coaching. So we have a mentorship program where I take you on and I work with you until you basically get sick of me or until you start becoming insanely profitable. And that's for life. So it's a one-time fee, and we work with you as much as you need to build a successful business. Thank you so much for listening. Have a wonderful, wonderful night, and we'll see you. I'm sure it'll be a jam-packed week. Make sure you trade smart out there. Have a great, great night, everyone. Bye for now.